Good morning. This is Larry McMillan with a stock market update on Tuesday, January 25th, before the market opens. We didn't get to the update yesterday. It was a little bit of a crazy day, as you know, and I thought that things might become a little bit clearer, but in general, they really haven't, even though we had this tremendous upside reversal, which probably puts a short term halt to the downtrend. We don't really have many buy signals yet, and in fact, just one. So still caution is needed here. The S&P chart obviously reversed up strongly from a low at around 42.22, and there had been previous some support around 4200. So that area is now support. It sliced through the previous support at 4300 for an hour or so. So that whole general area down there can be considered some support right now, although as we saw, it doesn't take much to crack through support when the selling is in panic mode. As far as resistance goes, there's resistance at the old highs at 4,500 to 4,530. Those were highs from last fall. And then the 20-day moving average is still up at 4660. So an oversold rally, which is what we're in right now, coming off yesterday's bottom, can continue all the way to the 20-day moving average, and you still are in a downtrend. So this rally could have some legs on that regard, but as far as actual buy signals go, we don't really have one. On the S&P chart, the S&P has gone below the -4 standard deviation Bollinger Band, modified Bollinger Band. So it's setting up a McMillan volatility band buy signal, but that has not taken place yet. Taking a look at the other indicators, I'm pretty much can describe them all in a simple phrase. They're on sell signals, but they're oversold. So put call ratios are shooting to new highs we haven't seen in a long time, really since the pandemic of 2020, or perhaps in the case of the weighted ratio, even before that. The weighted ratio is now above 100, meaning that for the last 21 days, more money is being spent on stock option puts than on stock option calls. That's highly unusual. Rarely ever happens. So, massive oversold condition, but we won't get a buy signal here until those ratios roll over and begin to trend downward. Market breadth is also abysmal. Had already been in deeply, deeply oversold territory. In fact, yesterday, in stocks only terms, breadth was positive. The reversal back upwards pulled a lot of optionable stocks back to the plus side. It was still negative in New York Stock Exchange and NASDAQ terms. But these breadth oscillators are still in oversold territory. It's going to take a couple of days of positive breadth or more positive breadth to bring these to buy signals. So right now, oversold, but still on sell signals. New highs versus new lows is just the most devastating I've probably ever seen there. This is actually worse numbers than we saw in the pandemic crash, because these stocks have been going down for 6 to 9 months. And so that fact that they can get to new lows is not that surprising, but this has been happening below below the surface. So, for example, yesterday there were over 1,700 new lows on NASDAQ stocks. There were over 1,400 new lows on stocks, only stocks, and almost 800 new lows on the New York Stock Exchange. As far as new highs, they're minuscule. They're 20 or less than 10. So that indicator is completely oversold and probably washed out, at least for the short term. But again, that's not a buy signal. We would need a couple of days on the New York Stock Exchange where breadth is, where new highs outnumber new lows in order to give a buy signal from that indicator. So that brings us to VIX. And VIX has been exploding to the upside. It did make a spike peak and came back down yesterday. And that is the one buy signal that we do have in place. So right now, on the short term, the VIX spike peak buy signal is in effect, and it will remain in effect as long as VIX continues to close below yesterday's high, which was about 39. The trend of VIX, however, is negative. The moving averages are moving higher, and the 200-day is just beginning to move higher. So that indicator will be on a sell signal, is on a sell signal, and will still be for a while. The big change is in the construct of volatility derivatives, and that the term structure of the VIX futures and of the CBOE volatility indices has turned downward negative. And so that's a big minus for the market. As long as that is the case, the market is going to have a big problem, and that is a major sell signal. Sometimes that only lasts briefly, but other times, like during the pandemic, it lasted for nearly the month of March. So on TV, you might hear some person who's really not too familiar with this say, oh, that's a buy signal if the term structure inverts. Well, eventually it is, but not necessarily right away. So again, it would have to flip back to a positive term structure in order to eliminate the sell signal that's there right now. So overall, everything is oversold, but pretty much everything is still on a sell signal. So we're going to have volatile action, but and we're not expecting to catch the exact bottom. That may have already occurred, in fact. But we have a good track record with waiting for these indicators to turn positive. For example, in 2018, when the market was making new lows right around Christmas, these indicators were already very oversold. But we didn't really get buy signals until January 4th, 5th, 8th, something like that. So by, say, January 8th, everything we had was on a buy signal. And the market had rebounded quite a bit off the December 24th lows of 2018. But still, there was a lot of room left on the upside. Same thing in the pandemic crash of 2020, March of 2020. The ultimate bottom was somewhere around March 20th or something. And our indicators, again, very oversold then, as they are now. But we didn't get buy signals or enough buy signals to really feel confident about the upside until about April 4th. So again, we're going to miss the bottom. I'm telling you that right now. But on the other hand, some people thought they had the bottom in place on Friday, and then by yesterday afternoon were probably selling, and then got caught in a tremendous whipsaw. So we're still cautious, understanding that the market's extremely oversold, but an oversold market can still go down. So thanks for checking with us. I will encourage you to subscribe to our newsletters, where we update all of these, I think, very important indicators daily. And good luck and good trading.